DailyFX BYOA contest for June 26th to February 1st, 2011. My name is David, and I'm going to be talking about the Kiwi dollar. Okay, I got a long list of things here I want to talk about, primarily the Elliott wave, trend lines, moving averages, and also kind of a fundamental outlook for next week. So let's go ahead and get started with the Elliott wave first. Here we are in the 4-hour chart for the Kiwi dollar. This is a very, very clean setup, as you can see here. Let's start down here, over here for the 16th of May. We got a wave 1 up, we got a retracement down, it's wave 2, 3 up, 4 down, 5 up, and now we've completed wave A. It appears that we've completed the B wave, and now we're kind of heading down for the C. So just want to talk about a few things here. We have a very, very strong third wave. Wave 5 kind of loses momentum here, so that's good for us, showing us that there's some momentum turning around for the other direction. Very, very strong wave A, as you can see here. So wave A, we get a drop of about 330 pips, so pretty nice drop there. We've got a completed wave B, and now we're kind of in the wave C. So what I want to talk about here is it's pretty obvious to most viewers that this is a pretty nice clean setup here, but what I do want to talk about, something very interesting, is typically with a wave C, the drop of wave C is usually almost always exactly the drop of wave A, and sometimes even longer. So for example, we got a drop of wave A about 330 pips. Okay, so if we're taking this high point right here as the high of B, we should expect 330 pips down. 330 pips down brings us back almost exactly pinpoint to the low wave 2. Okay, so we should be looking at a low here of 78.5. That should show us that it'll bring us back down there. And then also on top of that, sometimes the wave C drop can be just the same size as wave A, if not longer, so up to the 1.618 level. Moving over to the daily chart for the Kiwi, I want to talk about this trend line that we've had going here for a while. So going back to May, about midway through May, we got this trend line building up. We've got a couple retests of it. We've got a couple breaks of it intraday, but on a daily close, we've been above it. Okay, that's pretty important. Okay, and as you can see here, we just kind of got a close below it. We've got a penetration of it and a close below it. We don't have a full break of it yet. We're looking for a little bit more confirmation. So typically, one way I like to look at confirmation of a trend line break is one of two ways. The first way, obviously, is if you have two daily closes below a trend line, you can assume it's been broken. Or sometimes you can use kind of a percentage method. So if we look at here, the start of the wave, going up to here to the initial break, I guess you could call it that, 350 pips. We're looking anywhere for maybe a 10 to 20% break of it. So we're talking maybe 30 to 70 pips. That would bring us down somewhere around 86.50. Or maybe down here towards the 80.30 level, or 8300 level. So we're looking for a little bit deeper penetration on that trend line for it to actually be broken. But once it is broken, we could definitely see the momentum pick up and kind of just fall apart there. In terms of the simple moving averages, I'm just going to zoom in here. We've got the 20 SMA here capping prices for pretty much the last quite a while here, actually. So almost the entire trading week was capped underneath 20 SMA. That's good for us because that's showing us that the short-term trend is obviously on the downward. Here, okay, so that's good for us if we're going to be shorting. Candlesticks, a couple things I want to talk about that. As you can see here, these 3 days, including these 3 days as well, so 6 days here almost, we've got consecutive closes lower. Okay, so close lower. Same thing here, these 3 days. We've got a kind of an up day here, and then again, 3 more closes lower. So even though price was positive this day, negative this day, and then negative this day, we still have this kind of like a downward slope of daily closes. That's certainly important because that is showing us that each day prices are going up, not as much as the day before. From a fib line perspective, I've got a couple fib lines drawn here. One here starting from the middle of May up until, let's see here, 9th of June. Prices have been respecting this quite a bit. As you can see here, we got a recent retest of this in the middle of June. We got a retest down by 61.8, again at 50%, again at 38.2, and prices have been being capped here at 23.6. So very, very good behavior in regards to the fib lines. And last but not least, from a technical standpoint, I want to talk about the MFI index, or the money flow index. Okay, I don't think this is used too often by most traders, but I certainly like it quite a bit. I'm a big proponent of volume indexes, I think. So what we're looking at here is basically the MFI money flow index is showing us the enthusiasm of buyers and sellers. So I want to show you a very, very important divergence that we've got going on, or had going on. As you can see here, we've got a double top. Okay, we had that going on. I think that was talked about quite a bit by some analysts at DailyFX. But most importantly, we had a divergence going on. So as you can see here, prices went up, a lot of enthusiasm on the buyer's standpoint, and then ultimately prices went up even higher again, but it happened on a lower scale on the MFI, meaning that enthusiasm for buying was actually lower, even though prices went up. Now that's a very, very strong signal that weakness is on the rise. And as you can see here, following that high break, we got a 3.5 cent move almost back downward. So as you can see, we are heading kind of back downward. We bounced up again, and we're on our way back down. If we do get a break at this level here, kind of a tentative trend line I've got built here, I think we could really see ourselves getting down into quite a low area here, and that would mean that we're kind of sort of reaching the extreme of the seller enthusiasm, and I think that's kind of where we're heading right now. Last but not least, just from a fundamental aspect, I'd like to talk about what's going on next week. QE2 is ending. Risk aversion should really take hold. Money's going to be coming out of equity markets and going towards safe areas, safe havens. USD is one of those. So obviously the demand for high-yielding currency is going to be going down. And kind of last but not least, I'd like to mention that we do have quite a good correlation going on between the euro and the Kiwi, or just the euro and a lot of currencies for that matter. I think if we see the euro fall apart next week, you're going to see a lot of the other higher yielding currencies fall quite, kind of just like the euro is. That is for a number of reasons, but won't go into that right now. But anyways, thanks for watching. That's your video for this week, and good luck trading to everyone.